So, investing in the shares of a company when the markets are down, when things are bad, is very much like marrying a man. When he's down, when things are not going very well for him, but then, or probably when he's still in his hustling stage, you marry this man, and then suddenly he becomes a billionaire or he becomes a multimillionaire, and you guys rise to the top and start chopping life. That is what the markets are offering right now. But then, that aside, so one thing I like you to understand is that what Donald Trump is doing right now with the tariff, it might look like it's going to have counter effect, to the external world, but really he's actually aiming at something within America. And what is that? I remember in the last video I made, I said that the markets are bound to recover. There is something you must understand. What this is doing is going to cause a very, very huge inflation. And then I was just reading a report by the guys at JP Morgan. He said that we now have a 40% chance of going into a global recession, much like what we had. Much like what we had in 2020 when, of course, things went down. But we are likely going to go into a global recession because this is going to affect everybody all over the world. This is going to affect everybody. But then guess what? When this happens and it sends the US into a recession, the ultimate target of Donald Trump is the Federal Reserve. What he's likely to do, or what is likely to happen, is that we're going to have a situation where the moment we induce a recession, with all of these things you're seeing, tariffs here and there, the price of goods and services are going up. In fact, the guys that are even manufacturing within America are now being forced, because if you're saying, let's say, for instance, something as powerful as steel, for instance, now you're saying that, okay, you want local manufacturing to actually boost its supply. You want local manufacturing, to be able to meet up its steel demands. But what that is likely going to do is that if the local manufacturers know that, there's a huge tariff on the guys outside, what that will do is that it's going to increase the demand of locally made steel. And what's that going to do? If you have an increase in demand, automatically the price of the local steel is going to go up. That is actually one of the examples that, I'm giving you here. So, of course, Donald Trump is basically trying to force a recession, and what that is going to do is that it's going to force the Federal Reserve to lower the interest rates. And of course, he has been pushing the Federal Reserve to lower interest rates, but the Federal Reserve is not lowering the interest rate. So if the Federal Reserve lowers the interest rate, that is going to stimulate the economy, and of course, it is going to now force growth to happen. So and when interest rates are lowered, naturally the dollar is going to fall, and the stock markets are going to rally and celebrate that, because a lot of these companies that are struggling right now are going to be able to have access to capital, have access to loans, to be able to refinance and do whatever it is they need the money to do. So I was reading, because some of you have asked me how I always get fundamental reports. So I was reading some of the reports from the guys they released at JP Morgan, and of course it says here that JP Morgan research now believes that there is a 40% chance of a global recession. So now, if I just jump into my screen for a little bit, I'm going to show you the research from the guys at JP Morgan, because some of you have asked me, where do I get my fundamental reports from? Fundamental reports is basically everywhere. And trust me, if you're a trader, even though I am a technical trader, I trade using the technicals. The fundamentals give me an incredible idea and give me an opportunity to be able to hold my trades out for longer. So JP Morgan research now believes that there is a 40% risk of a global recession taking hold this year, up from 30% at the start of 2025. That means by 2025, analysts believe that there was a chance we were going to have 30%, there was a 30% chance we have a recession, but now it is 40%. We see a materially higher risk of global recession due to U.S. trade policy, says Bruce Kasman, chief global economist at JP Morgan. The administration's shift in the application of tariff policy and the potential impact on sentiment have contributed to this increased risk. So that is exactly, what we are dealing with right now. So I also want you to understand that this new tariff is going to also affect the GDP growth of America. This is basically like trying to inflict some wounds on yourself so that certain things are forced you, so that you can force the hands of the feds. So now President Trump announced 25% tariff and blah, blah, blah. Okay, I'm probably not going to read all of this. If you want that, I'll probably leave a link to this particular page in the comments. If you're interested in reading all of these reports, you go there and read it as well. But as a trader, trust me, you just have to know this. So in response to the auto tariff, JP Morgan Research has further revised its growth and inflation forecast. Remember that the Federal Reserve were aiming to have an inflation that is close to 2% for it to be able to lower the rates. Now they are saying that number could likely continue to go up. Now it sees a 0.2 percentage point to hit the US GDP, which moves the estimate for the year down to 1.3%. So we're expecting that we're going to have a 1.5% growth on the GDP, but now we have lost 0.2% on that, meaning that the GDP is not going to grow at the rate that we're expecting it to grow. All right. So inflation. Okay. So 1.3. Okay. So personal consumption expenditure (PCE) price inflation for 2025 is expected to climb to 2.7%, up 0.2%. We're 2.5 now. We're expecting it to climb, 2.7%, while the core PCE inflation forecast increased 0.3% to 3.1%. So likely, all of these things is going to happen, and we're going to have a sustained high inflation. But if this continues, it's going to force a global stagflation. Remember, I told you there's stagflation where you have, high inflation coupled with, slow economic growth, and of course, poor employment and all that. So that's what you have, coming in within the market. So one thing I want you to understand is that, trust me, like I said in the beginning, this market is definitely going to make a recovery. The stock market is going to pick right back up. And one thing you don't want to do is, in the midst of the negativity, trust me, this is the time that institutions are making huge purchases. They're buying up all of these assets. We are seeing, for instance, something like Tesla. We're seeing Tesla, a company that used to, trade at $550 per share. Tesla is now trading down at in the 240s region. So when you look at that type of situation, it goes a long way to tell you that there is a very, very good chance that Tesla is providing an opportunity for investors to be able to actually get long the asset. Let me see if I can quickly pull up Tesla on the screen here. If we take a look at Tesla, this is using technical analysis. Oh, we even hit this order block in here anyway. So Tesla is currently trading at $239, dollars per share, most likely. For me personally, if I was going to get involved in this for a long term, I would prefer to see a sweep of the $212 per share region. So most likely $212 per share. Tesla is going to trade below $212 per share. And if Tesla does reach $212 per share, it will provide a fantastic opportunity, for investors to begin to actually get long, on the asset, because quite frankly, at $550, I think the maximum price looking at this, was $488. So the maximum price looking at this was $488, which of course the market ran through this liquidity at the top here and built up the steam, for the major sell-off, which is what we're currently seeing right here. So most likely, when we get to the 212 region, $212 per share region for Tesla, it is an opportunity for you to actually begin to get long. Forget about this thing that saying Elon Musk, that canceling Tesla, that banning Tesla. It's just the propaganda needed to keep the share down, and then eventually asset managers, some of these guys who are investment bankers, hedge funds, they are buying the bad news, trust me. And if for whatever reason Tesla decides to halve his way, halve all the way down, this is more than halving anyway. So if Tesla decides to come all the way down to, let's say $101 per share, and sweeps all of this liquidity that we can see within this region. If Tesla decides to come right back down and sweep into all of this liquidity that we're seeing here, I'm telling you, it is still a huge opportunity, because mind you, if you're getting involved in all of this, you're not buying it and trying to sell it next week. That's not what you're doing. You're not buying this week and you're selling next week or that kind of thing. No, you are buying and you are holding for a couple of years down the line. That is exactly what you're doing. And if you have a couple of years down the line, why does it matter whether you're getting in at 212 or at 140, 150, or you're getting in at 101? What matters is that this is an asset that has a huge upside potential. And this is, one thing. If anybody asks me, hey, what's up? Do you have any idea what I could potentially invest in? First of all, I'll tell you that I'm a licensed financial advisor, but at the same time, I'll tell you that, Tesla is really, really looking good, and it's providing a huge opportunity for investors to be able to actually get in at heavily discounted prices. These are discounts, and this is basically a time of global reset. And any investor that falls off at this time, they are completely on their own. So, if you have any questions, any pair you would like me to analyze, anything you would want me to look at, any suggestions, whatever, please leave them in the comments, and I'll be more than happy, to get to that as well. And in the meantime, don't forget to subscribe, like, share, and bring your friends on board. Like I said, if you're a trader, something has to be in your head. You have to know all of these things. Not every time supply, demand, buy, sell. The technicals, I know it as well as any other thing you can imagine. But trust me, you really need to be sound fundamentally if you're going to do this and do it at a very high level. See you on the next one. Cheers.